And so we're going to talk today. Welcome. Thank you for joining us. We're going to talk about 5 multifamily myths debunked. My name is Devin Elder. My co-host is Abel Pacheco. On behalf of apartment educators, we'll get started here.
All right. So kind of going into our vision for this multifamily meetup. So the reason we call it a multifamily meetup still is that's how we started about a year ago here locally in San Antonio, Texas. And we met once a month and, started in a small room, Devin's office, and led to a pretty large couple of venues right before March of 2020. We had a good following and just a good networking event. And unfortunately, with the current pandemic, it's harder to shake hands and meet in person in big groups, obviously. So we've continued this webinar series, and we're doing this every other week. The purpose for it was to put a lot of like-minded individuals, people that all had the same goals. We all want to go do deals. We all want to create wealth for ourselves. We all believe in real estate, and we understand that there's that better way to do it than single-family investing. So hence the multifamily meetup to provide education, a platform for people to meet and network, meet other partners. Your network is your net worth, as they say, and this is that opportunity for us to get together. So that's our cadence. That's, a little bit about us. And, with the pandemic, we're trying to do everything we can to keep the ball rolling. So hopefully everyone appreciates that so far. And that's us. We'll just keep rolling through these slides real quick. And we want to thank our sponsors, Apartment Educators. Thank you, guys. Apartment Educators is a group of individuals that coach, train, educate, and mentor other people that want to go do what we're doing, basically sponsoring multifamily syndications. It is not the easiest thing to start doing on your own if you don't have guidance, if you don't have coaching and education knowledge on how to do it. So Apartment Educators, I want to thank them. They're an amazing ecosystem locally here in Texas that's unlike no other, really. We're, the majority of everyone that is investing in Texas, if you're interested in it, we are in San Antonio. We've, grew up here, a lot of us. We've done deals here, a lot of us. Not that you have to be a San Antonioan to be a part of Apartment Educators, because we have a few members that are outside of San Antonio, but they join this area because they know we have a fantastic market and they want to create an instant network, an instant ecosystem of other general partners, other investors, other like-minded individuals that are Texas driven. So if you are interested in obtaining coaching, education on the syndication side on how to go put a deal together actively, let us know. There'll be a link at the end of the webinar. You can provide an application. We can't coach everyone. Unfortunately, time is limited. And in between our own deals, the Apartment Educators team will coach others. So it's always nice to have those applications. And when we do come in, we'll let you know if you qualify here. So thank you very much to our sponsors, AE. And as Devin mentioned, below, you'll see the Q&A box. If something comes top of mind, don't wait. Don't put it in the chat. Put it in the Q&A. We like to get back to those at the end of the of our session here. So we'll just keep rolling. Devin.
So the agenda for today, we'll introduce myself and Abel in a little more detail briefly. We'll spare you the whole narrative, but we'll do the intro. We're going to talk about why multifamily as an investment vehicle. And then we're going to cover the 5 myths around multifamily, and we're excited to get into that. And then, as I mentioned, we've got Q&A at the end. As questions occur to you, just put them in the chat box. We'll address all those at the end of the presentation. A little bit about me. My name's Devin Elder. I was born and raised in San Antonio, Texas. I worked for 2 of San Antonio's largest employers for about a decade before striking out on my own as a real estate entrepreneur. Since that time, I've done over 200 real estate investment deals. We're in over 2,000 doors of multifamily. And, the valuation on that's around 140 million and growing. And so we're really excited to continue to grow our multifamily investments we love multifamily for a lot of reasons that we'll dive into. I'm here, why am I taking my lunch break, spending time with you guys? Everything I've built has been a result of networking and building partnerships and so forth. So I continue to do that. I like to help other people get into this business. I like to partner with other people. I like to invest with other people. And it's a two-way street. People invest with our firm, people partner with us, et cetera. And that all starts with building some sort of relationship. And that starts here. So that's why I do this. Abel?
All right. My name is Abel Pacheco. I'm the president and principal of Five Talents Commercial Real Estate. So it's nice to have everyone on. A little bit about me. I'm from Corpus Christi, Texas. So I spent my first 18 years there and then moved to San Antonio and pretty much spent the back half of my life there. UTSA grad, if any of you are familiar with San Antonio. And I was in essentially real estate since 2008. I met Devin at that same professional career. Had a long track record as an IT sales executive, a leader, and had some good runs. $5 million in acquisitions, all the way up to $57 million in acquisitions. And I realized if the train ever stopped, which was me working, then I would have no income coming in, which is what led me to multifamily. I'm invested now in about 860 something doors. Half of that is as a passive investor, so limited partner, passive investor. And then the other half is as an active general partner, leader or sponsor on the opportunity. So excited about that. And the reason I like to give back is, I've had a lot of success over the years in professional and also real estate. And in every one of those, careers or successes or milestones that I've achieved, there's so many people that have helped me along the way. It just, again, as Devin mentioned, we're aligned in this. We like to give back. We like to help others. We like to serve. And then at the same, I've realized there's a virtuous cycle in multifamily and partnerships. The more I help others, the more people help me. And then if we can partner as an investor, a general partner, a different team member, man, we're going to make everyone a lot of money. And so I want to meet and shake hands or, build a relationship with as many of those potential new investors and partners as possible. So this was a great platform for us to do it, give back and meet others. So we'll lay a foundation for the investments, right? Why multifamily? I think this will help paint the picture of why 100-unit plus apartment complexes that we're really investing in. And this is really what we're talking about as multifamily, not two, three, or four units, but really larger. And I think the main part is it provides a lot of consistent just cash flow and equity building opportunities. So the difference between the dirt, the brick, the wood of a real estate building that's there, it's stationary, and stock is imaginary. Man, if Elon Musk says the wrong tweet, and he's done recently, you could have a fall in your stock. If Netflix cranks and sells a lot of new memberships like they have during the pandemic, but they missed their projection by a small point, the value is then decreased drastically, where we're creating a very stable, very solid investment that provides cash flow. And cash flow allows us to spend money on our groceries, our gas, our pay the rent, where equity alone may not be able, I can't spend it or eat equity, but I sure can spend cash flow. So that's what allows us to keep going. It provides some amazing tax benefits. When we invest in multifamily and are an owners as part equity owners, we take massive tax deductions when the government gives us some opportunities to accelerate our depreciation. Instead of taking losses over a very long period of time, we then squeeze them down, which allows us to take, reduce our taxable income on W-2s. I mentioned I started as a passive investor. It's one of the main key reasons that I invest, and I find a lot of other investors do the same, is they want to try to avoid that W-2 income on this side. And if they can invest, create wealth, create cash flow, build equity, have some really great portfolio investments, and reduce their taxable income. All of those things are great. Multifamily builds that long-term wealth, which we're all looking for, not just the single family, but how do I build a portfolio that I can, potentially build, pass down to my children, that generational wealth, and all of those things. And then lastly, we're experiencing, with the pandemic, man, if I was in a different type of asset class right now, definitely be, a bit more worried than we have a nice, stable, just a basic need investment that we're putting our money into. There's water, there's food, and everyone needs to lay their head somewhere. So this is a great asset, and this is why we love multifamily.
So let's get into the myths. Myth number one, you have to be ultra wealthy to buy an apartment complex. This makes sense, right? Apartment complexes are expensive. We're talking $1 million, $5, $10, $20 million, maybe $100 million. We're not quite buying the $100 million stuff, but we buy the $5, $10, and $20 million apartment complexes, right? So just the numbers you're seeing right there and the amount of commas in that price tag is shocking maybe to the average person that's just working a job and they've got, a W-2 income and a 401k. That might just sound crazy. And it is true that there are some wealthy individuals that buy real estate. My observation over the years has been people either made their money in real estate, like a lot of people I know that have gotten into multifamily and made a lot of money doing it, or they came to real estate after they made their money. Maybe they had a company that went public, or they were a professional athlete or something where they can make a lot of money in a short period of time. And the smart ones that you call kind of all end up in real estate, right? So there's certainly some individuals that are wealthy out there that buy apartment buildings, right? There's the lady that owns the LA Lakers, I think. Lady owns the Lakers. And how did she end up owning the Lakers? Well, her dad started in multifamily in California, decades ago, and that parlayed that into being able to buy the Lakers, right? So just an example maybe of one person, but it's not always just one wealthy individual or family buying an apartment complex. A lot of the time, many times, it is what's called a syndication, right? Where you've got a group of people coming together to buy something that is otherwise out of reach for the group. I mean, it's somebody that's got $50,000 or $25,000 to invest. They're not buying and operating a $10 million building. But where they can participate in a $10 million building by partnering with a sponsor. The sponsor is the person to go out, identify, and buy the property. Well, that sponsor is going to need some money too. So let's look at a $10 million building. That might require $3.5 million of equity, meaning investor capital. And the rest comes from the bank, right? The bank's going to really, on just about all these projects, put up most of the money at 3.5%, 4.5%, 5% interest. Really, really attractive terms, right? So if you're looking at a $10 million building, the bank might put up 6.5%. The other 3.5% is from investors. Well, that's $3.5 million. That's still a pretty big check for one sponsor to go out and write. So the sponsor might say, well, I'm not going to write a $3.5 million check because that might be all my capital. Now I'm done. I'm in one deal. That's it. I might write a check for $500,000. And I might get the other $3 million from investors. And this might be $25,000 at a time. I might have 20, 30 investors on a project, right? So the sponsor's putting substantial capital in the deal, but they're not having to put $3.5 million. And they're certainly not having to put the whole $10 million in there. So in this fashion, we can divide up the responsibilities here for bringing the capital to the deal, and we can all benefit. So you've got a sponsor that's owning maybe 30% of the whole deal for doing all the work, and they're putting in some of their own money. Then you've got passive investors that are doing nothing. They're not managing the property. They're not doing any work. They're not taking phone calls. They're not scheduling renovations, none of that stuff, right? They're simply putting their capital to work in a very pure fashion where their capital is going out and earning money on their behalf, which is the best way to earn money, right? It's detached from your time. It doesn't require any time from you. It's infinitely scalable. You can go out and be a passive investor in 20 deals if you want, right? And then you have that equity building up. You have cash flow coming in off all those things. So it's very scalable. So that's how folks that are not necessarily ultra wealthy need to buy an apartment complex, get to buy an apartment complex. And there are some laws that allow us to bring investors into deals that we have a pre-existing relationship with, even if they're not of a certain net worth. Right. So basically, this opens it up to a huge pool of people that can qualify to passively invest in these deals, even a little bit at a time. And to take it another step, sometimes people think they don't have a pool of capital to invest with. They've only got $20,000 in a savings account. Well, they might have $200,000 in an IRA and not be aware that they could put their IRA to work. On our projects, probably 20% of our investors on any given deal is IRA money. And they like that because they can't touch that money until retirement anyway. They deploy it in a multifamily deal. The profits go back to the IRA, and they could just keep doing that until they're old enough to retire and pull those funds out, right?
So Devin, on
yep.
that point, I don't know if you remember us talking a few years ago, like a couple of years ago, and I was asking you how do you even get started, and how do you do that? And you told me something. You provided some education, which I'm super thankful for. You told me, Abel, you don't need cash. And I actually didn't have, I put in my first investment, $50,000 as a passive investor in 128 units, right? And so on that deal, I didn't have that cash. I had net worth that was increasing because I was a single family investor, but all my equity, like, I would say a lot of real estate investors, or especially probably in single family, all my equity was tied up. I couldn't spend it. I couldn't get it. I could try to do a refinance or get a HELOC or do one of those things, but it messed with my investment. And so when you told me, hey, there's a lot, you can use a 401k, maybe at your old job, which was ours at Rex. And so in there, I took that 401k, converted it to a self-directed IRA, and started that process. As soon as I started learning about it, when you had a deal that was coming up, man, I realized I can take action. I can move forward. I can do this immediately. And my lifestyle didn't change, which every time I invested in single family, when I saved up 35, 40 grand to buy another house, my lifestyle changed because I was all my cash at that point. I would save up for a few years and spend it. But when I got to invest my IRA, it was like, oh, I still went to dinner at Myron's Steakhouse with me and my wife the day after and celebrated. I didn't feel bad about it. And that's a myth, that you have to be this ultra wealthy individual. And you've got some resources most of the time that we can tap to invest in these things. And they're amazing. So
that's a perfect illustration. Thanks for sharing that. That's exactly hits home here for this myth. So I think we can move on to myth number 2 here. We'll talk about myth number 2, getting a loan for an apartment is hard. This stands to reason too. Let's use this $10 million example. I like using a $10 million example. We're buying a building right now as we speak, it's right about $10 million bucks. And so it's a nice round number to talk about. But the loan on that building is $77.5 million, right? That's a big amount of money. Now, we've all, maybe not all of us, but we've had the experience, a lot of us, of buying a house. I remember when we bought our first house for my wife and I to live in, and there was a stack of closing documents. It was very intimidating. I didn't know what a lot of it meant, but somehow they gave me the money, right? This was in 2008. So I think if you could fog a mirror, you're getting a loan on a house, right? But it was still kind of a process to go through. They want to see tax returns and all this. So I think your average person would think, wow, if I'm getting a $7.5 million loan, this is a much more difficult process. And frankly, it's not. It's almost funny how simple it is in some ways, right? If you have the right team together, the process of going out and getting these bigger projects is in many ways actually easier. I always chuckle when I see the requirements of a 650 credit score to get a $10 million loan. I'm like, that's lower than to go get a lot of other types of loans, right? But the reason is these are asset-based loans, right? These lenders are lending mostly on the asset itself. They love the fact that it's a building, it's a piece of land, it's an income stream, it's a business, right? And so the lenders are very comfortable. And now what they want is a competent team to buy that deal, and they can back that team. So in many ways, it's actually easier to get an apartment loan than it is to get a house loan. Frankly, I was refinancing 2 single-family rental houses I had. This was 2.5 years ago. At the same time, getting a 4 million loan on an apartment complex. And I was doing the same thing right at the same time. And the $4 million loan was actually less paperwork, actually simpler to get. And because they're lending on an asset. Now, you need some things, right? As a general rule of thumb, the lender's going to want to see net worth of the team equal to the loan amount. So on a $7.5 million loan, we're going to need the net worth of the team to be $7.5 million, right? If you don't have that, you get a team member to partner up with you that does to satisfy that requirement. And there's going to be some liquidity requirements too. Rule of thumb is 10%. It might be 9 or 12 months of payments, but 10% is a safe rule of thumb. So if you are getting a $7.5 million loan, they're going to want to see 7.5 million. 10% of that would be $750K liquid, right? So those are some requirements, but any deficiency you have in multifamily, you can make up with a partner or a vendor. This is a team sport, especially on these big projects. So myth number 2, getting a loan for an apartment is hard. It certainly work, but you may be surprised that it's easier in some ways than even getting a loan on a single family property. Abel, I don't know if you got anything to add on that piece there.
You shared 2008, right? Market downturn. And I remember my first loan to buy a single family house was $116,000. They asked me for my bank statements for six months, whatever. And they circled this one line item, which was a cash deposit of $800. And they said, where did this money come from?
$800.
What happened, it was, this is back in the day. My wife's car broke down. She wasn't my wife at the time, she was my girlfriend, but her car broke down. I sold some turntables on Craigslist and I had a plus deposit of $800. And then I told them that and they go, well, we want to see the Craigslist ad. They made me do a screenshot, $800. Here's the listing. And that was a requirement. And I had this, this thing in my head that there's no way I'm going to be able to buy an apartment building at $5, $10, $20 million. There's no way. You can verify me all day and I don't have $1 million, $2 million, $3 million bucks, right? So that stayed with me forever. And that's why I, went on this trek to buy a bunch of multifamily houses for 10 years. And when I finally realized, okay, I got on the partnership team, 1 deal, 2 deals, and I'm trying to put our own deal together, this deficiency that you mentioned, and I get a key principal, someone who I knew, liked, trusted. We knew each other. We're coaching, doing all the things. And we put them on the loan. And now you're like, this door unlocks, that was officially closed to me that said, all we have to do is just partner with the people that have experience, that want to, do deals. And I'm actually benefiting them, bringing them an opportunity, and they're benefiting me. And that's the power of a team. A loan for apartment is not as hard as you believe if you have the right, education, knowledge, and ability to take action. And so, yes, that's also what I would share there.
I love it. Thanks for the feedback. That's right. The bank wanting to see your Craigslist post is like very indicative of kind of the hoops you have to jump through on the smaller deals. And look, there's going to be some hoops to jump through on the bigger deals too, but they're surprisingly not as bad as you would think. And I want to make it, you mentioned a term there, key principle. So if you're going to go out and buy a deal and you don't have that net worth or the liquidity, well, somebody else does. And that person that's made that money, they may not want to work. They probably have worked pretty hard to get that money. And they may be interested in being more passive. And so you're actually providing that person an opportunity. Now, this is all predicated on a great deal of trust, right? Of course. So that starts with building relationships, right? But assuming that is there, you're providing an opportunity for that person that has the net worth because they don't have to go run the deal. They're going to get some equity in your deal and they may get some fees too. And they don't have to go do the work. You're going to go do the work. So you kind of have a spectrum, right? Work on one side and money on the other. And as you get closer to the money spectrum, you naturally want to do less of the work. If you have less money, you're going to do more of the work. That's how it goes. And that's the trade-off. But that creates good partnerships because you're creating an opportunity for somebody that has a high net worth Maybe it's a doctor, a dentist, somebody with a busy day job. They don't have time to go run out and do real estate, but they don't mind getting a piece of your deal and not having to really do any of the work, right? So you're creating an opportunity for somebody else. So we could jump to myth number 3 here and talk about apartments are difficult to manage. So I'll say right out of the gate, they are difficult to manage, right? You're dealing with people. I always say, anytime you put a couple hundred people on a couple acres, some stuff's going to happen, right? People are going to have issues. There's just going to be issues. So apartments are difficult to manage, but the key is that you don't have to do everything, right? And that's a big distinction on multifamily versus single family investing. It's very natural and common if you have one rental house to do everything. On my first rental house, I remember I was over there on a Saturday morning trying to fix a clogged sink, which I have no business doing. And I had this aha moment because I was fortunate to have some mentors at the time that were leading me down this path to go bigger with multifamily. But I started out with single family, and I was there on a Saturday trying to unplug this tenant's drain. And I thought, if I have to do much more of this, I'm going to hate real estate. And I'm going to be one of those people that says real estate doesn't work. And there's plenty of people that say that, right? So I decided right then and there that I was going to try and get out of actually doing the work on a property forever, if possible. And would it cost a little more? Sure. Yeah, it would cost me. I'd have to hire a plumber and stuff like that. But I decided I wasn't going to be involved in the day-to-day work. Apartments are that on a much larger scale. You can't do the work, right? I mean, maybe if you have a 10 unit and you're retired and it's your prerogative and you like being a handyman, go for it, knock yourself out. But for most of us, we're looking to build investments. We simply don't have the time or the resources to go work on managing leases, marketing, fixing, plumbing issues, et cetera. You have on-site staff and you have a team doing that. You even have a management company handling things like accounting, marketing, et cetera, right? So all of that stuff, yes, apartments are difficult to manage, but what you do is it's so big, you have to put together a team to go do this because you can't possibly do it yourself, right? And so by plugging in a professional management company, you're leveraging their decades of experience to go do the day-to-day operations, which puts you more in the CEO or owner role where you can oversee the execution of your business plan rather than actually doing the day-to-day stuff that can make real estate very difficult, right? Doing repairs and things like that. I mean, if you're actually doing that and trying to manage the investment, that's too much stuff, right? So you want to have a team on site, oftentimes a full-time staff on site doing the day-to-day on that property, and you're just providing oversight there. So that's a huge advantage, even over just single-family investing. If you're running them yourself, that can get very laborious and it can wear you down. And you have to think about your dollar per hour value, right? I mean, if you're a dentist or a doctor, your dollar per hour value is very high. Or an entrepreneur, or fill in the blank on somebody that's highly compensated, right? The dollars you make per hour that you're working are very high. If you trade that to go be a handyman in an apartment complex, that's not a very good use of your time. So you have to be cognizant of your dollar per hour value, even if it's a projected dollar per hour value. This is what I started early in my career. I said, hey, I want to be at X amount per hour. And anytime I was involved in an activity that wasn't there, which was pretty much all day at the time, I would try to reset. So with an apartment complex, you have a team. This is a team sport. We're going to reiterate that forever. The team sport we have doing the day-to-day work so you can focus on being an asset manager, being an owner. Anything, Abel, there that you want to fill in? Any gaps there?
Yeah, when you say apartments are difficult to manage, every business that makes more than $1 million a year, 4, 5, 10, $15 million a year is difficult to manage. And if you have a hat on that says, I'm an entrepreneur and I'm going to do this on my own in any type of business, 1 million, 5 million, 10 million, you won't be able to either create it on your own or manage it on your own. There's no possible way. So what you're doing is you're realizing, yeah, I can't do operations, accounting, bookkeeping. I can't market. I can't sell. I can't fill it. I can't, all the things that go into any other $1 million plus business. You're leveraging a team, and as long as you have that hat on in multifamily investment, it's a multifamily investment. It's, we're buying a $5 million, $10 million business. So there are going to be other teams that you're going to, leverage and use their expertise. And so, yes, as Devin mentioned, they are difficult to manage, as is any other business. And if you want to invest in it, you've got to, be practical about how your dollar is invested and what your role is in this investment.
Love it. Yep. Let's move on to myth number 4 here. We'll dig in. You need to start with single family before you invest in apartments. Guilty, right? I mean, I fell for that one for sure. And, I learned a lot from it. But the mistake and the trap people fall into is they think they're going to learn skills in single family that translate to multifamily. The truth is that they're really more like parallel tracks. One does not lead to the other, right? It's one, the single family track has its own set of contractors, brokers, realtors, renters. I mean, this whole ecosystem of things in the single family track. And the problem with that is people tend to get stuck on the single family track. I was one of them, right? Abel's on the single family track for a long time. And I love single family rentals as an investment. Just, if somebody's got zero real estate, I love single family rentals. I'm getting my kids into single family rentals now because it's, they're not going to go buy a $10 million building, but they can sort of understand single family. So they are starting there, right? But if you want to get in multifamily, get in multifamily. Start learning that. Get around the folks that are doing that. Get with like-minded individuals. Get with people that speak the language. The nomenclature of anything is very important. Acronyms, and every job has them. The military has them. There's a whole culture that goes to it. Same thing with multifamily, right? You're not going to hear anybody talk about NOI in single family, right? For the most part. So there are two different tracks. The skills that you learn investing in single family do not necessarily make you a multifamily expert. And I was kind of shocked when I'd done single family for years and done very well. And people in the multifamily world, the brokers and the lenders, they didn't care. They didn't care if I did 100 houses. How many apartments have you done? Well, okay. Just doesn't translate, right? So if you want to get in multifamily, get in multifamily. You can invest passively. We always talk about three steps to being a sponsor. The first one is to invest passively. You might be able to do this with as little as $25K. Second step is to get on the general partnership of a team, of an experienced team. That way you can get more experience. And the third step is to go run your own deal. That's a series of steps I've seen play out over and over and over again. That's how I got started in this business. That's how countless others get started. So step 1, invest passively. Step 2, get on the general partner of a larger experienced team. Step 3, go run your own deal. And all that can happen in a year if you were really aggressive about it, right? So huge opportunity there, but you want to start developing the multifamily skill sets, attending events like this, listening to podcasts, meeting other multifamily investors. Invest passively in a deal so you can be on the plane. You're not flying the plane, but at least you're on it. And that's going to give you some experience there. Right. And so that's our counsel to anybody wanting to get into multifamily. Don't sidetrack for 3 or 4 years in single family. Now, if you need to build up some capital and you're going to do some single family to do that, that's what I did. That's fine. But don't be under the illusion that you're going to learn all these skills and you're going to get all these contacts from single family. They're going to translate to multifamily. In fact, you might have a stigma on yourself as a single family investor and your whole Rolodex of contacts when you try to get over to multifamily. That's just this, that might actually hurt you because you're going to be the single family guy. Right. So the skill sets don't necessarily transfer. You can jump right into multifamily investing as a passive investor is the easiest way to start, and then scale it up from there. But you're going to want to start with the base layer of all this, which is, as always, your education, right? Education and network is going to be the foundation to all of this stuff. So it's better to get started educating yourself now so that you know what net operating income is, or you know what a T12 is, or you know what a rent roll or unit mix is, as early as possible so that you can develop your skills in this business. Abel, what can you add to that?
Man, so 10 years of single family before the last 2. It took me 10 years to buy my first 8 properties. It took me 2 years to get invested in 865. And the myth that you need to start there, incorrect. And I like what Devin said because a couple of different type of people that are investing, multiple different points on the spectrum of, do I have a lot of money and no time, or do I have a lot of time and no money? So wherever you are on the spectrum, you can kind of gauge yourself. But I like to think of it as, if you have no money but have a lot of time, you need to give that time and trade it as quickly as you can. Trade it and provide value to someone else. And if you can do that, you're going to get some knowledge, which will allow you to make some more income. If you look at it on the single family side, if you have $0 and you can't invest, and like Devin said, you don't have enough to buy your plane ticket to go along for the ride, single family may be amazing to get your enough for the plane ticket on the ride. It might be enough to get your first $50,000 of what I call active capital. You need 50K to go invest in your next deal. I don't have it. Man, go do buy a house, force the appreciation, flip it, sell it, get it. That may take you a year, but don't stay in that same process 10 years, because you'll just every year going to make 50. But if I took the 50 out and put it into a multifamily deal, you've created this cycle, which is make active capital, which you have to work your time, your effort, energy, resources for, and then you put it into a passive investment, which allows you to earn money while you sleep. That's what you want. So you don't need to do that if you have more money, if you have a better financial, position in life, and you've worked hard, your professional career, your W-2, high earning individual, man, that single family cycle for 6 months, 9 months to make 50K, you're probably working 25, $30 an hour at most. If you do this in your professional career, you may realize when you do the math, man, I'm like 50, $70 an hour. So take that money, put it in a multifamily deal, and you've got a way better return on your time. You don't have to start in single family. You could jump straight into multi. And, if you're somewhere in between, you got some money, you got some time, but not enough to keep, doing multiple, then spend your coaching, education, your mentor cycles on multifamily. Go do a deal or two on single, but only to grab your capital to invest it back in multifamily. That's kind of how I, have been doing it the last couple of years, trying to transition away from the single family cycle into multifamily.
Love it. It can be hard to do. It can be hard to get off of that, that track, and that's the thing with anything in life. Be careful what you start, because starting's easy, right? Quitting things is harder, right? Same thing with multifamily or single family, especially if you start making a little money at it. It's like, man, you build your whole Rolodex, your ecosystem, your skill set, all that stuff in single family. That's okay, right? But if your goal is to be in multifamily, get into multifamily. So we could jump into myth number 5 here and dive in. Apartment investing takes too much time. So let's address this from a couple of angles. This is kind of like this apartment investing is complex. It definitely takes time. Whether it takes your time or somebody else's time is the differentiator here, right? Because if you're going to build anything of scale, you must leverage, right? If an author was to talk to people and tell them their book, they could tell it to a couple of people. If they write it down and sell it on Amazon, they might tell that story to 1 million people because they've got some leverage, right? So we want to leverage OPT, OPM, and OPK, right? OPT is other people's time. We want to leverage OPK. We want to leverage other people's knowledge, and we want to leverage OPM, other people's money. And if you can do those 3 things, you can build big portfolio here of multifamily, right? So you want to leverage other people's time. This comes from your team of expertise, right? You got an attorney on your team. You're not trying to learn the law from the ground up. You're leveraging an expert. You've got a property management company that's been doing this for years, and they know the ins and outs of operating a property. You're leveraging them. You might have a loan broker on your team so that you're not going out and talking to 20 different banks and trying to pitch them on why you're a good candidate. You might have a loan broker do that on your behalf. You might have a property broker going out there and finding properties for you, right? So all those things take a tremendous amount of time and expertise. But the key is it does not need to be your time, right? So as a sponsor of a deal, you are spending time on it, right? You're identifying the property, performing due diligence, putting it under contract, buying it and operating it. That takes time, right? That's what I do for my day job, right? We operate apartment complexes. I'm also a passive investor. The time involvement there is the couple of minutes it takes me to review an investment package from another sponsor that I know, like, and trust, and I've developed a relationship with. And then the 10 seconds it takes me to wire funds in when they need it. And that's about it. So I can go be a passive investor in this deal and in this deal and in this deal and in this deal. All of those are growing equity. I'm getting losses on my tax return on paper. I'm getting cash flow distributions from those things. And it doesn't require any more time from me, right? So that's scalable. So I can leverage other sponsors' time to go run the deal, and I can passively invest with them. And still, passive investors own 70% of the deal still, right? It's a pretty cool setup. And then also on the deals we're running, I'm leveraging other people's time, my property management company's time, my attorney's time, et cetera, to do the day-to-day work so that I am overseeing the project and not necessarily in there with a hammer, hanging drywall in the unit, painting, all that stuff. You're leveraging other people for that. And arguably, I've said the word team a lot here, but if you're flipping a house, it's not much of a team. It's maybe you and the general contractor, right? With an apartment complex, you really have to have a team. You've got to have somebody in the leasing office. You got to have a maintenance guy, and you're going to have a property management company handling the accounting and marketing, like I said. So that stuff's all being done on a day-to-day basis by somebody else. Doesn't mean you're necessarily on the beach drinking pina coladas the entire time, but if you have a good team, you could, right? You could spend a couple hours a month on it. So that's because of the team that gives us a lot of power to either not work all the time on it, or if you're like me, work all the time and do a ton of deals, right? I like to work all the time. So I just fill that up with a lot of deals. That's just my choice, right? So that's the power of having that team in place on a larger project where you're almost forced not to do it yourself. Because our tendency is always to want to do things ourselves, right? As entrepreneurs or just as people, if we're perfectionists, we want to do it ourselves. You just can't. There's not enough hours in the day to do it on multifamily. You've got to leverage a team. And when you learn to do that, you can either not work a whole lot of hours on it, or you can use that freed up time to go do more deals. What do you think about that, Abel?
Yeah, I mean, everything you've said is spot on. And the leverage part is the hard one for a lot of people to grasp if they've been solo, if they've been, on a small team, how to leverage your personal time and make it scale. And, my example, right, 10 years to do my 8 properties, that was not flipping or rehabbing a renovation. It was just how much time did it take me to go buy that many deals? And I was a holder and a landlord, a renter, right? So the next year when I said, hey, I need to kick up the gas, I need to turn it up the heat, let's go, I went and did 8 transactions in 1 year. So the time, and I didn't do any sheetrock or plumbing. My wife will attest, I do not know how to do any of this work in a single family house. Some of the stuff in the house is broken, and she's like, you need to call somebody already. Yeah. But anyways, I did 8 transactions in 1 year, and I realized the time that it took was just so heavy, like on paperwork, on applications, on, how to do another loan, how to, fill out the same bits of information, name, number, social, credit score, this, that. Here's all my banking statements, and the other ones that I did last month don't apply because they're not the most recent. And so all of that time that it takes to go do that 8 times in 1 year, I spent, as Devin mentioned, about 45 minutes to an hour looking over an investment summary, an offering memorandum. I knew the market, so I already kind of knew that part. I guess it was easier for me, and asked for some track record and some background experience. And then I took another 45 minutes to read a private placement memorandum, which was a little, long legal doc. And then I wired some money, and I was in 128 units and an owner in that. And that's the difference. I mean, that was plain and simple. So much easier to scale your time in multifamily syndication, especially as a passive investor. And then if you're a general partner, an active partner like Devin, where he fills his extra time doing that, then you're reaping a bigger part of the rewards than a passive investor. You're taking a passive investor earning plus an active portion of it. So, which is really great.
Love it. Love it. So those are the 5 myths. If you've got some Q&A here, go ahead and throw them out. There's a Q&A button at the bottom of your screen there. And in the meantime, I'll ask Abel a question just to kick it off. Are you doing anything with single family now, Abel, or are you completely out of it?
No, I still, like you said, I got the system rolling, and it's harder to get out. So we still have, we have like a renovation in flight. We have 2 or 3 holds that we are still in. I was able to probably sell 3 or 4 of these properties earlier this year. So I call them my COVID houses. Get out of those houses, take out the equity. And then that's the money that, I say, thankfully, I've been able to have a nice, 6 or 7 months during the pandemic time with my family, because, hey, the equity was there. I think we did the right things for the 10 years prior. I don't want to totally, dog single family, but that's, it helped me now. And now we're transitioning over. So every once in a while, I'll have somebody, probably every 3 or 4 days now, somebody sends me an offer. Hey, there's a single family house and it's $50K, and you can turn it around and make 15, 20, 30K, and I have to pause, stop, and realize that the 20, 30, 40K profit, if I were to go forward on that, is probably going to steal 100, 200, 300K worth of equity in a multifamily property that I should be spending my time there. So, that's how I view that, is I have to be very strict with myself not to get, not to go down that path further. And we still have some partners that we all do really well, and they want to continue in single family. So it's, we're trying to leverage a little bit of that time, effort, energy, and then, I turn more of the reins over to them. They can learn it, and they want to go do it, and they want to learn multifamily also. So it's kind of my position right now.
Awesome. Yeah.
How about
we got a question?
100% I've gotten out of it, or
I got like a dozen single family rentals, and I probably keep those forever. I'm starting to give them to my kids every year on their birthday, so they're learning that.
Awesome.
They're learning that biz. So a question from Facebook: how do you get on the GP team? The GP is the general partner team. That's kind of step 2 of the process I talked about. Step 1 is invest passively. Step 2, get on the general partner team of an experienced team. And step 3, go run your own deal. There's a variety of ways to do that, right? You might contribute something called risk capital. When we go buy a deal and put a deal under contract, you've got usually 1% earnest money, right? If we're talking about that $10 million deal I mentioned, you're looking at $100,000 earnest money. So if you've got cash and you can bring that to a team to put that up for a couple of months while you close a deal, that's one way to do it. You may come on the team in another way and you got to add value in some way, right? That might be through bringing some capital relationships that you have to the deal for some of the capital. It might be some of the management duties. It might be the fact that you're local in a market and the sponsor's not, right? So, there might be a deal in Corpus Christi and you live in Corpus Christi and the sponsor's in Dallas, Texas, and they want somebody on the general partner team that is local so that you can go in and check on it. So there's a variety of ways that you can get onto that general partner. It all starts with relationships, right? I get emails on LinkedIn, people asking to to be on the GP of a deal, it's like, man, you're asking me to marry you on the first email. That's just not how relationships work, right? So you got to start building relationships. Again, this is why we created Apartment Educators, for an ecosystem of people to start building that relationship, because you're not just going to email somebody out of the blue and immediately get onto the general partnership of a team. Good question there. So if you've got other questions, you can type them in. If not, we can move to the next event that we're going to be having here. And I think we're just about at time, so we can talk about our next meetup. It's on August 5th. This is at 12 Central, same as this one. How to network in lockdown. So we're still in lockdown, amazingly enough, but we've got a 12 p.m. Meetup here on the interwebs. Come join us. Register for that at apartmenteducators.com/events. And then we've also got August 19th, same thing at 12 p.m. Central. This is a networking event. So it's a virtual networking event, but we're big believers in building relationships and building your team. And you can do that in our next two upcoming events next month, August 5th, August 19th. Just go to apartmenteducators.com, Google Apartment Educators. Go over there. You're going to find us on the events page, and be sure to like us on Facebook so you can see all our updates. We're really active with social media updates. And you know what? There's a kind of an educational component to our social media as well. I mean, we're constantly posting stuff about multifamily investing. And, we talk about learning the language and the nomenclature of multifamily investing. You're going to start to do that just by liking us on Facebook. So there's some free instant value there on Facebook. So thank you guys for coming out. We will wrap it up here, and I appreciate you spending a little bit of your lunchtime. Can't wait to see you on the next event. Thanks so much. Have an awesome day.